If you are a prospective home buyer in 2026 and you are going out there to market, and I'm probably gonna get like death threats from lenders out there that don't do this. If you're going out there with anything less than a fully approved loan in hand, it's like choosing to be like everybody else. And to be strategic and to win, we have to strive to be unlike everyone else. Are you looking to buy a house in 2026? Well, you got to know the game has changed. The question is, do you have the playbook for success? Well, I'm here today with a very special friend of mine, somebody I've known for, my gosh, I can't even count how many years, to talk about exactly that, to get tactical and to help our buyers and future home buyers out there realize very critical tactical steps they need to take to make sure they're positioned for success in 2026. Kambria Minton, my dear friend, one of my most trusted advisors in real estate. We've known each other, what, for almost 20 years now?
Almost.
20 years.
Crazy.
So it is crazy. Cambria is with Fidelity National Title, has been in the business for 25 years, so just a year older than I am in the business. But between the two of us here, we have over 49 years of real estate
Yay.
experience. Hey. So I think it's the perfect context and we're the right partner here to be discussing just how much things have changed, right? How real estate has evolved over the last 2.5 decades. And specifically, I think there's a lot of fear, frustration, trepidation about what's going on. Is this the right time to buy? Not the right time to buy. There's all sorts of theories and all sorts of internet trolls that have very, distinct opinions out there. So today, maybe we can just break some of that down and leave people with a walk away if they are one of those people that are looking to purchase a home next year, on some things that they might be able to kind of like armor up with,
Right.
so that they're better situated to do so.
Love it.
So,
Love
yeah.
it. Looking forward to it.
So real estate 25 years ago.
Ah,
It's like when Fred Flintstone, they put the big stake on the side of his car. I always tell people that when they say how long I've been in the business. I said, well, I financed Fred and Wilma's house when they bought it a long time ago. Cambria, I'm sure you would agree that things have changed.
so much. So much.
I think that it went from it went from a time where people were really invested with their clients because of the lack of technology, the lack of systems where they really had to engage like one-on-one with somebody, and then something was lost in the 2 decades following that
Right.
time, and it became very digitally run. In fact, a lot of buyers, I read a statistic that over 70% of prospective home buyers find the home they want to buy on their own, and then they call a real estate agent to go and show it to them. That's
Right.
different than it used
It's
to be,
crazy
right?
how things have changed.
So you work primarily with real estate agents as they are progressing through the practice of real estate.
Right.
Like, look, without getting like overly controversial, like what are some of the characteristics that you think have like changed from like your avatar of what it used to be versus the avatar that we're seeing out there today?
You bring AI into the picture, and a lot of people are scared of it, and a lot of agents are embracing it. The ones that are embracing it, it's allowing them to do so much more than they were able to do back in the early 2000s, to where literally you have like 5 people on your team when it's just you, when you have AI working for you and the systems working for you. This was before really we even had the Blackberries, right? I remember getting the Blackberry and I was able to go to New York and answer emails from New York, and nobody knew I was in New York. It was crazy. So, with all the technology that we have, it can definitely help you or it can definitely hinder you. The ones that aren't using it are going to be left behind.
Okay.
100%.
So I read you loud and clear. I'm on board with that. And even me, I'm the biggest dinosaur of them all when it
It's
comes
hard.
to technology. I'm starting to take steps into that arena.
Right.
But has with the adoption of AI, have we lost something?
Personal touch,
Personal touch,
100%,
yeah.
I think,
I know. I'm feeling like that's kind of an issue.
Mhm.
I see repeated situations now where a market, particularly like the one that we're in right now, right? We're just challenged with with just this overarching feeling of fear, like, oh, is this a bubble? Is it the
Right.
right time to buy? Not to mention the fact of a massive affordability
Right.
issue that
It's
is
hard.
real. That's not a political thing. Like,
No, it's
nobody has to
hard.
has to scratch their head and say, boy, it's tough right now for
Right.
people to just get on with
Hmm.
life
Yeah.
between food and housing and energy costs. And I mean, just the cost of everything is
All
just
the
so
above.
substantially higher. I feel like this is the era where that personal touch and helping step people
Right.
through that scary period
Right.
is what you need most. And I feel like so many people have abandoned it.
They have 100%. And it's our job to bring them back to that.
One at a time,
Right.
one borrower
Right.
at a time.
So let's get tactical. We've identified that there's definitely a major disconnect between clients, agents, client, lenders as well. So, what are three things that we can identify to help our agents and buyers when working with them?
I think that there are some powerful tools out there today to help give buyers an advantage in a marketplace that is otherwise like pretty challenged, right?
Right.
So let's kind of break that down. First of all, you have um, buyers that are facing an affordability challenge that we've never really seen before,
No.
right? And
Right.
and the high cost of housing plus the high cost of money, interest rates,
Right.
has only compounded that. It's made it even worse.
Right.
So most of the strategy things that like I'm dealing with today to help borrowers be successful is mitigating that piece
That's a
right there.
huge piece.
Yeah, definitely. It's a huge piece. It's
It
the
is.
biggest piece of all, right?
Right.
When somebody is sitting around on their, living room couch with their husband or wife and they're talking about like, hey, is this the time? Are we ready to jump into home ownership? I mean, it really ultimately comes down to like, can we afford it? I mean,
Right.
there's other factors for
Right.
sure
Right.
in every household, but like, I don't think there's anybody who's ever, especially a first time home buyer, who's ever made the decision to buy a home that hasn't had can we afford it as like one, two, or three top priority out of
100%.
everything. So the first tactic that I would talk about would be leveraging the market to help mitigate exactly that affordability component. So we have sellers out there that the market has definitely changed also.
So much.
2.5 years ago, my goodness, you tried to go out there and buy a house, you were fighting against 20, 30 borrowers on the
Right.
same home.
Right.
And it made it like virtually impossible to be successful with it without basically giving up the farm.
Right.
Now the script has changed, and now if you're a seller that legitimately wants to sell your home, you have to know that you're going to have to play ball with a buyer.
Absolutely.
And the good listing agents out there are coaching the sellers in advance to say, hey, look, the biggest problem that prospective buyers are facing out there is affordability and
Right.
the monthly payment that's going to be associated with this house. So,
Right.
how can we intervene to mitigate that? And the thing that pops off my head, Cambria, number one is the use of seller concession.
And what does that look like? Because I know buyers when they're coming into it, they know what their bottom line is, what they're currently paying for rent. Let's say they're not a homeowner yet, and they're thinking, "Gosh, I'm already paying $3,500 a month for rent right now. How do I even go into looking to buy for a home, and how can I even get in?"
Yeah.
Right?
Yeah. Well, so seller concessions, just from a definition standpoint, first and foremost, is when you ask a seller to credit some of their proceeds
Okay.
towards your benefit as the buyer. Now, so with the market cooling off a little bit in prices, thank goodness, leveling out a little bit.
Right.
I'm gonna hold back from saying prices are going down. There's
Correct.
not a lot of like empirical evidence to support that. Feels to me more like if you went to get a latte and kind of blew the foam off the top. I feel like that's what's kind of resetting right now. But it is. But a lot of buyers out there are going to market and they're looking at reducing the price, right? Everyone wants a deal. I
Right.
get it.
Right.
So when the news or social media is telling you, hey, you can offer less than what they're listing the price for, of course, everybody goes there.
And
But
they're
buyers are
getting
getting
very
picky. And,
picky.
and you know
Yeah.
what? They're coming off of 3 or 4 year period,
Yeah.
Cambria, where they they couldn't be picky at all.
No,
They
they had
had
to
to
take what they could get.
they had to take what they can get. They had to
Right,
like bow down to these sellers, and
right,
now the script has changed a little
right,
bit. And it's understandably like maybe there's even like a little chip on the buyer's
right,
shoulder a little bit, which is
right.
okay. When you look at let's just use an example,
Okay,
right? If somebody were buying a $500,000 home today,
okay,
and they said, well, hey, I'm not going to give you $500,000 for your house, Cambria. I will give you $485,000 for your house. I want a $15,000 price reduction because
right.
why not?
The market's going
The
down.
market's going down,
Right,
right? We're seeing things go down. So I want to realize that. So instead, I'll offer you $485,000. It sounds like a win.
right.
Yeah,
Yes.
not to the seller. Yeah, well, the seller's
Right,
in none of the things I'm going to be talking about
right.
today. The seller's not
No.
going to feel it as a win to
Right,
this, except for the fact that they actually get to sell their home,
right,
which is a win,
right.
right? This
Very true.
can be a win-win
Yeah,
situation for everybody. But that $15,000 price reduction, at the end of the day, for most borrowers, assuming like traditional type financing,
right.
would only result in lowering the payment by about $92, like 90
Really?
bucks
Wow,
right?
wow.
And don't get me wrong, every penny
Helps. It
counts.
does.
But is there a better way to utilize that $15,000? Would there be? So, what a lot of people, and strategically, when I'm working with home buyers in order to mitigate that sort of affordability crisis
Mhm.
for them, is saying, hey, look, yeah, I get it. We have leverage.
Right.
We can get the seller to lower the price by $15,000. But what if we didn't? What if we kept the price where it was at and we asked instead for $15,000 of closing cost credit, which means that seller
Okay.
is going to give us $15,000 of a budget, a piggy bank that we
Right.
can work with to better optimize the borrower's loan. Now, there's some options at hand. Well,
Okay.
first of all, if a borrower is like well set, they love their financing, they're good to go as is, they can simply just use that to keep the $15,000 in hand,
Hmm.
right? Because I mean, I don't know about you, but that opens up the door to other homes. Because if you're working with limited cash on hand,
Right.
which is unanimously the single biggest hurdle, especially for renters transitioning into home
Right.
ownership, is
Right.
the lack of cash on
Okay.
hand, right?
Okay.
For sure.
Yeah.
So if you all of a sudden, if I'm going to pay 15,000 towards your closing cost, Cambria, that means at the end of the day, you've got $15,000 in your bank when all is said and done that you would not have had otherwise,
Right.
right?
Okay.
You can do a lot with that 15,000, including expanding the type of home that you can buy, right? Because there might be a home out there and you're like, wow, after down payment and closing costs, I'm gonna be out of money. So you have to get a house that meets every single one of your needs.
Mhm.
But if you all of a sudden have $15,000 to work with because the seller's covering your closing costs, you might be able to consider a house where you have to change the flooring, where
Mm.
it needs an interior paint
Right.
job, where
Okay.
you want to redo the bathroom downstairs,
Right.
right? Like
Right.
it just cash is king,
Right.
as
It
they
is.
say. So it
It is.
opens up the door by utilizing the seller's money to free up cash on hand for the buyer.
Okay.
Okay.
Now, what are some other ways they can use that 15,000 for?
Even better
Right.
actually
Okay.
would be utilizing that $15,000 credit to
Buy down
do
the rate?
to buy down the rate.
Okay.
And there's two ways to do that. We can either do it on a permanent basis or what we call a temporary 2-1 temporary buy down.
Okay.
So permanent is like makes all the sense in the world, right?
Right.
Like if
Right.
today's
To me, that's where my mind goes.
that's where everybody's buying.
Yes.
That's like the traditional way
Right.
that most people approach this is okay, today's interest rate is 6.25%, if that's the marketable 30-year interest rate. Well, we're going to use this $15,000 and we're going to do a buy down of our interest rate to
Okay.
maybe get us to 5.375.
Okay.
Sounds great,
Right.
right?
Right.
Now, if a borrower did that on the same scenario we've been talking about, this $500,000 home with traditional type financing,
Right.
by utilizing that seller credit towards a permanent buy down, you're going to improve at the end of the day the overall mortgage payment by approximately $275.
Wow.
That's good.
That's different than what? The
The $92.
$92?
So hand in hand, right?
Wow.
Reduce the price by $15,000. Your mortgage payment goes down by 92 bucks. keep the price
Right.
at 500,000 and instead utilize that money towards a permanent buy down. Instead of a $92 monthly savings, you're now at $275 of monthly savings.
Wow, that's a
Okay.
big deal.
That's a big deal.
How
You
do
want
you
you want
get
to hear a bigger
Yeah,
deal than that?
that's huge.
Okay. So a temporary interest rate buy down is a way that a lot of borrowers are looking at utilizing in 2026, specifically because all the signs in the market from a forecast standpoint are alluding to the fact that we are approaching better days from an interest rate standpoint.
Right.
We're already starting to see it. It's not going to be like this cliff dive that we're off. So over the next few years, we should see pricing, mortgage interest rates and interest rates just in general begin going down.
Which means prices are going to go up, right?
Yes. Well, I mean, yeah,
Ish.
theoretically, the cheaper something is,
Right.
the more the demand for it. I
Right.
mean, that's just simple, like, economics 101,
101.
right?
Yeah.
Law of supply and demand. But what we can do is we can utilize that same seller credit to doing, instead of a permanent, a temporary buy down. Now, why would somebody want to do that? Check this out. Here's how the numbers play out. So again, we're looking at that marketable 6.25% interest rate. A 2-1 temporary buy down allows your payment to be based off of an interest rate 2 points below. So if your actual rate is 6.25, your first year's monthly payment for 12 months is based off an interest rate of
0.25. Okay.
4.25%, right? And then on the second year, it goes up to a payment based off of
5.25.
5.25%. I mean,
Okay.
this really, really changes the game,
It
right? Because
does.
you're looking at a monthly savings of that first year of over $600 a month.
Wow. So if they're comfortable with saving $600 a month, which they would be, this now opens them up to looking at a home that is sales price is higher as well, right?
Potentially,
Opens it up, opens the door for them.
it definitely opens up the door from an affordability standpoint. Now, don't get me wrong though, because there's a lot of like naysayers out there that'll immediately go in and say, "Oh, that's an adjustable rate mortgage." It is not an adjustable rate mortgage. You have your mortgage note would be a 30-year fixed at 6.25%. All we're doing is taking the seller's money and we're using the seller's money to subsidize your mortgage payment for the first 2
Whoa. Okay,
years.
say that again. So the seller concession of $15,000, you're using that money how?
We're going to use it to subsidize your monthly payment for the next 2 years.
Wow. So the note is actually written as a 30-year
So
fix. It's not an adjustable, which at first, my mind goes to 2005, 6 when you say that. So my mind always goes fix, fix, fixed, right? But it will be a fixed conventional 30-year loan.
absolutely. And we
Wow.
can do
Okay.
this both with conventional financing, we can do it with FHA financing, with VA financing. It works pretty universally across the board. We're just literally taking the seller's money and subsidizing your monthly mortgage payment for the first couple of years. Now, why could that be important to you? Well, a couple of reasons,
Right.
right? Number one, somebody who's really sort of betting on the market, the
Hmm.
fact that interest rates will be lower in the future, it
Right.
gives you a nice couple year runway
Right.
for interest rates to go down, and then you can refinance on a permanent basis at that time, hopefully, if all
Right.
the stars align
Right.
properly, and then you're left with a better monthly payment, like universally moving forward. But that's not the only reason why. I work with a lot of buyers where husband or wife, maybe they're in school to
Mm,
become a nurse, right? But they want to buy now,
right.
even though they know they might have a six-figure income coming a year from now. They
Right.
don't have that income right now.
Okay.
So it allows you, when you know that you have a meaningful financial change in the next few years, this is a great way to hedge that mortgage payment, not by using your money, but by using the seller's money, who's
Right.
basically paying your mortgage payment, or at least a portion of it, for the first couple years.
Now, does a buyer qualify on the 6.25%?
They do. And that's
Okay.
why this makes it a really safe loan,
Right.
because we are calculating, because eventually, if they did nothing at the end of the first year, so the first year, the payment is better by about $600,
Right.
right? In the second year, so month 13 through 25, payment
Right.
13 through 25, the mortgage payment will still be better by a little bit over $300. And
Right.
then at the end of the second year, and you go into your third year, it's just up
You're
to the normal payment
right.
based on the 6.25% interest rate or whatever the
Right.
marketable rate is that day. And forever, it exists that way until you sell or refinance or do whatever it is, just like you had a regular standard mortgage payment. But we
Right.
qualify people from an approvable standpoint based on the full interest rate. So all you're getting is a little bonus. It's not putting somebody in a position where they're all of a sudden we're giving them mortgages that they
Right.
can't afford,
Afford.
because
Right.
they have to
Afford it.
illustrate that they can afford
Afford
it
it
at the full amount
at the very beginning of the loan.
at the very, very
Yeah.
beginning of the loan. Otherwise, they wouldn't even have the benefit of doing this. It's just, I mean, these are just ways to utilize a softened marketplace where we can leverage the seller's equity,
Right.
not your money,
Right. Right.
the seller's equity to either A, keep cash in your bank account,
Right.
B, permanently lower the interest rate if
Mhm.
you are like super conservative in your kind of your own personal fiscal policy,
Right.
or if you're a little bit more aggressive, you can use a temporary interest rate buy down and really change the game with how much monthly savings that you're going to realize.
About an option that could help them do this, right? So how do we market to the sellers so that they are familiar with, instead of doing
Yeah.
a price reduction, to offer this, and also to the buyers so that they know that it's ultimately going to give them a more purchase power, um, because I do hear from agents that in their open houses, they have a lot of people visiting that maybe are only pre-qualified to 450, let's say, but they're going to an open house where it's listed at 515 because they're thinking that they're going to be able to go in and give them an offer that's $50,000 less and possibly
Right.
get in the door,
Right.
when that's not the reality of the right now. So how do we get the word out to, you know?
I don't know, find the tallest mountain with the loudest
I
bullhorn. I don't
know,
know. I mean,
because
I
it's a
think,
great option.
yeah,
It
it
really
it
is.
really is, and it comes down to the issue that we're facing with current real estate practitioners. It is
Mhm.
the lack of engagement, the lack of
Right,
education, and the lack of giving strategic plans to people. Because if I was a listing agent, I would go to a seller and saying, "Hey, look, we're not going to wait for the buyer
right,
to ask for a temporary 2-1 buy
right,
down.
right,
Every piece of marketing that we're going to put out there is we're going to say, we already are going to do this for
right,
you,"
right,
because I think that's going to immediately, you know, help your property or that seller's property stand out amongst the rest. But look, it takes math, and people suck at math
I know.
at the end of the day, Cambria,
Right?
right?
There's a calculator for everything,
There
or an
is a
app for
calculator. I've got a
everything.
calculator actually to give to real estate
Right?
agents to help them illustrate this to their sellers out there. But it really just comes down to, like, the importance of making sure you're aligned with the right person. I wish this was a universal problem that could be fixed,
Right.
with like some kind of blanket approach, but it isn't. Like, the qualifications for doing what we do in this industry, Cambria,
I
are
know.
not hefty.
So I have a crazy story about this. Was speaking on the phone with somebody this morning that I absolutely look up to, and wanting to get his pulse on the market of what was going on. And this exact conversation came up. And he basically said the agents that are out there, not all, because there are some absolutely amazing agents, as you know, but there are some that do a major disservice to buyers out there.
Yeah.
And he had a listing on a property. Buyer came in, submitted an offer, wanted seller concessions. They negotiated back and forth. And what it came down to is the buyer's agent got the lead from Zillow and had to pay an X amount of fees to their broker that is more than what they're going to be bringing home. And this agent basically walked away from the transaction because they would not accept 3.9 commission for the buyer's agent.
So the
So
the
the
buyer's agent wanted the seller to pay them
3.9%.
more money.
Yes. And everything else checked the boxes for that buyer. It was their home they wanted. Everything worked out. And ultimately, I don't even think the buyer knows that that's why they walked away from
Mm,
the deal. And so he brought that up to me this morning, and I said, wow, greed, greed,
yeah.
really?
Yeah.
So it's really sad what we're seeing with some agents out there. So it is so very important to align yourself as a buyer with somebody who's going to know about all these programs, so that if it comes up to a home that's been sitting on the market and you want to offer them lower, then let's talk about the seller concession and see if
Yeah.
that's an option to get your payment down.
No
I don't
doubt.
know, you know?
Yeah, well, look, I mean, I think there was a cleansing of the real estate industry back after the 2008 sort of
Oh,
financial meltdown,
100%.
right? So if you look at the average real estate tenure post the financial crisis of 2008 in 2009, they've pretty much only known one market,
Right.
low interest
That's
rates
true.
and climbing
That's very
prices. So
true.
all of a sudden, we're here at this fork in the road where things are changing a little bit, and people are running around out there like going absolutely haywire because it's not because there's something wrong
No.
with prices leveling out or
Right.
interest rates going up and
Right.
going down. They just are not experienced with it, and they don't know how to help people migrate through it.
Right. I feel like this has been the new norm for me and my business for probably last 4 years,
Yeah.
where it's no explanation to anything. It's normal. It's a normal market. There's some months that are a little bit more busier, some that are a little bit slower, but ultimately when you look at the end game of the year, I've ended up usually about 10% actually above of what we've been doing the year prior. So the last 4 years have been normal, but people don't see it that way.
Yeah, no,
They
they
don't.
don't. They
They
don't.
don't.
And you know that this what we're dealing with right now reminds me of what we dealt with in the years leading up to 2008 as
Yeah.
well, because
Scary.
yeah, well, because you had
Yeah.
people where real estate professionals, both lenders and real estate agents out there, were like the single biggest opportunity. The reason
Mhm.
for a home buyer to buy a home is that, hey, buy this home today, and next year at this particular
Yeah.
time you'll have $80,000 of equity, right?
Right.
Like
Right.
whatever. And the problem with that is that, like, historically that was happening.
Yeah.
So people, it was kind of the proof in the pudding, and who wouldn't want that?
Right.
So the discussion about real estate became about the immediate,
Mhm.
right? Like, what am I going to get now? Like, what is this going to look like
Right.
next year, the year after? And I think that's dissuading a lot of potential homeowners today that are maybe concerned with what the prospectus of housing appreciation is going to look like over the next year, 2 or 3 years. Not that
Right.
anybody is really overly forecasting these like big bombs or blow up. I mean, we are
Right.
still in an inventory crisis.
Mhm.
Most of the people that are naysayers on real estate are internet trolls that are out there
Yeah.
posting these things. They're not designed to educate people. They don't
No.
even have the credentials to educate
Right.
people. They are simply selling clicks because
Right.
they monetize their YouTube
Yeah.
channels or TikTok channels. And, it's like that, morbid freeway thing where, like, if somebody's driving by a car accident, they slow down a little bit because they
Right.
might just see a leg hanging
Uh,
out of the car door,
yeah.
right? Because that's what sells.
Right.
Good news doesn't sell. We
Right.
know that, just like the media today, bad news sells. And that's what they're doing out there. But unfortunately, a whole generation of prospective homeowners are really just clouded with the reality of this. I mean, let's take, if you were to have bought in Southern California a home in 2007, which was like
Yeah.
the pinnacle,
Yep.
right? Top of Mount Everest on
Right.
prices, right before an incredible,
Crash.
historic market crash
Mhm.
that we have not seen since the Great Depression,
Right.
right, in this country. Say you would have bought that house for $400,000.
Mhm.
Right? Everybody said, "Oh, you're an idiot, this and that." People were letting their house go to foreclosure, throwing
Right.
it back to the bank. If you would have not let go of that home and you were to own that same home today, don't get me wrong, I get it. It's been what, 18 years,
Right.
okay? So it's been a minute. That same home that you bought at $400,000 would be worth close to
I believe it.
$900,000
I
today.
believe it. There's and if anybody knows Earl Bonowitz, he's amazing. He's was a broker in town forever. Always gives words of wisdom. Earl the Pearl, words of
Earl
wisdom.
the Pearl,
And
I love that.
he said one thing that he always told his buyers is that there's one thing I can promise you. If you're scared because I don't know if I should wait, if interest rates are going to go down, I don't know. One thing I can promise you is that your home is always going to be worth more in 10 years. So just like you said, had you bought in 2007, fast forward to 2017, your home would be worth what? 800,
Yeah.
900,000? I don't know the exact numbers. Do it if you can afford it, bottom line, and there's different ways that people can do that. Let's do it because don't wait. It's always going to be worth more in
Absolutely.
10
We
years.
have to we
Always.
have to switch the lens of the prospective
Yep.
homeowner out there to understand that this is a long game,
Right.
right? This is a
Always.
marathon, not a sprint. And there are more millionaires
Mm-hmm.
created in the United States of America through the
Yeah.
vehicle of real estate than through any other mechanism. It's
Absolutely.
not becoming a social
Proven.
media
Yeah.
influencer.
No.
It's not having that viral thing. It's
Tell that
owning
to my
real
son
estate. I know, my sons
who
too. They're
doesn't understand why we go look at real estate. He just doesn't get it.
you know, and if you're a young prospective home buyer and you haven't come from that environment where homeownership was championed,
Right.
this makes that the understanding of that even more distant because
So
it's
true.
just all about like everybody, we all have this like, what do I get today
Right.
mentality. It's all about
Instant
like, yeah,
gratification.
instant gratification. It's looking down at our toes instead of looking down at the future where we're
Future.
headed. Anyway, all right. So seller
Yes.
concessions and utilizing seller concessions to better the buyer's position.
So
But
that's number one. Number two,
so,
break it down.
all right, the TBD underwrite.
Okay, what's that?
So the TBD underwrite. All right.
TBD.
So here's the deal. So I'm going to use you as an
Okay.
example again. If you were selling your home today and you were sitting there with your realtor on your kitchen table with your husband, and there's three somewhat comparable offers.
Mm-hmm.
Okay. So let's take price off the
Because
table
we
for
know
a
that's
moment. Yeah,
obvious.
because obviously the almighty dollar will ultimately win in the
Right.
negotiation in most cases. But all things equal otherwise, what are you asking your realtor? What is the number one most important thing as a seller that you are interested in when you're evaluating offers of people who want to buy your home?
Can they close?
Can they
Right. Can
close?
they close?
Right? Can they
Yeah.
close? That is the question of the day. And that the reason that's such a question is because our market is just literally saturated with
Mhm.
deals that fall through because the fact that the buyers were
100%.
not able to
I'm
qualify.
seeing a lot of that.
Now
Yes.
that so there are certain terminology that people have probably heard. There's hey, I'm pre-qualified, and
Right.
then there's I'm pre-approved, right? Well, this is not like a standardized definition amongst the lending industry, so a lot of people use this very loosely. But a pre-qualification is really based on unvalidated information. So, hey, Miss Minton, how much money do you make?
Mhm.
Oh, I make about 100 grand. How's your credit? Pretty good. It's all of this
Right.
kind of like anecdotal stuff. But it says, okay, well, look, it generally seems based on what you're saying to to suggest that yeah, you should
Right.
probably be able to buy a home. Congratulations, you're pre-qualified,
Uh,
right? Pre-approval is one step above that.
okay.
And that is just taking all of this anecdotal discussion points and proving it,
Okay.
right? So how do you prove income? Pay stubs,
Right. Right.
W-2s, tax returns, verifications of employment, sourcing where the money is coming from, the down payment to come. I can't tell you how many people were pre-qualified and then they go in there and they go buy a home and they're like, oh yeah, we just got to go sell this car over here and we'll have the
Oh,
money. Like, dude, we have
oh
like a
no.
2 week escrow. Like, what do you mean
Yeah.
you're going to sell your car?
Oh no.
So pre-approval is definitely a step above a pre-qualification because
Okay.
the lender should be asking the borrower to provide all of the data, all of
Proof.
the validation, the
Yeah.
proof, right? Now, a TBD underwrite is taking the pre-approval and making it to like the nth degree, right? It is the absolute best, most strategic position for a borrower to be in as they go out there and to buy a home because what you then do is you take all that documentation
Hmm.
and the lender submits it to a real live human being underwriter.
Oh
So
wow.
instead of a pre-approval letter, you actually have a conditional loan approval. Now what that does is it tells the seller, hey, not only has the borrower had their credit run, had it analyzed, submitted all their paperwork, they verified all of the
Right.
income and the appropriate parts of the approval, but now the underwriter has put their blessing on it.
All they're waiting on is what? Just an
Just the
address,
property,
basically, and
right?
sales
Yeah,
price?
absolutely.
Okay.
So now not a lot of lenders do TBD underwriting
Okay.
because you're basically utilizing a very important and
Yes,
expensive
you are.
resource
You are.
for companies.
Yeah.
Underwriters are not cheap personnel.
No.
They make a lot of money, rightfully so. They
Right.
are the guardians
Right.
of the financial institution's money.
Right.
So they're not cheap. And so most mortgage companies do not want to allocate their time to TBD underwrite a deal that may never end up becoming a deal. They may
Right.
never buy a home. Yeah, so a lot of mortgage companies will point their resources only once a house is under contract to buy.
So do they get like a letter from you
You
or what is
do.
it?
You
How is
do.
it different
I mean,
than
there have been situations, Cambria, when it's been really, really, really tight in a
okay.
negotiation
Right.
standpoint, where because we had taken our borrower through a full
Resources.
underwriting
Yeah.
process, we were able to edge out the competitive offer that they were working with. And it got to the point where I had to literally get my underwriter on the phone with the listing agent. Like say, hey, dude,
Wow.
you don't believe what I'm saying? Here's my underwriter.
Right.
And,
That's
and
cool.
here's a copy of the conditional approval, right?
It's not a pre-qual.
It's not a
Yeah.
pre-qual. It's not a pre-approval. I mean, a lot of times, it's just about education, right? Like when me as a lender, whenever a borrower submits an offer for purchase, because we've achieved this like nth degree level, that's the first thing I do. I pick up the phone, I call the listing agent, and I
Right.
say, hey, you may think all of these offers that you're getting are the same. They're not the same.
Right.
Ours are done. I need an appraisal and a preliminary title report, and I can have money in your seller's hands in 10 days,
Wow.
right? Because the borrower's already gone through that entire process, the jumping through the hula hoops,
So
the
you said 10
explanations.
days.
Yeah, absolutely.
Like normal lenders say what for a typical close on a loan?
Yeah,
21
21's fast. I mean, the
fast,
industry standard, even the
but
contractual
10.
standard is 30. So
Yeah.
yeah, when we can, when I can go to that seller and I can say, hey, what's your most compelling thing? Oh, Dave, well, we already have our replacement property in Idaho.
Right.
We're trying to get out of here as soon as we can sell it. I can say, well, how about I get you your money 20 days earlier than that other offer can?
Which is almost like a cash offer, really.
Oh,
No,
there's
you
been
know what
times,
I'm saying?
honestly, there's been times where I've been able to match a cash offer from a close of escrow standpoint. The seller gets more money on a financed offer. So they're like, yeah, no brainer, Dave. If you can close this transaction in 10 days, it's yours.
And you can prove that. Yeah.
Absolutely. And we
Wow.
have case study after case study after case study to prove exactly that. But we would be unable to do that
Right.
if we didn't have the borrower in advance
Right.
be done with all of these hoops and t crossing and I dotting that it takes in order to get approved.
So it can't be a buyer that's saying, "Hey, I was looking online. I called my agent to go look at this property. Can you get me a pre-approval letter?" And
That well,
it's not going to be good.
I mean, unless they bring everything in the kitchen sink to my office that morning,
Right.
right?
Right.
That's going to be
Right.
harder.
Yeah.
But when they're already TBD, it's really
You've already
sending a
been in touch with
message.
them.
Yeah,
You've
and it's
been
not only
working with
that. It's
them.
just like from a psychology standpoint, you're telling the seller, like, I'm really serious about this.
Right.
I'm not
Right.
playing games with your house, your money,
Right.
your future, right? Because a lot of buyers are very interested in what they want, right?
Right.
I want this house on these terms and I want to close escrow here. But like sometimes we neglect to like observe the fact that like the person selling the house also has a
Oh
life. They
yeah.
also have a next chapter that they're moving into. So them having so the seller, you in that example I gave, being able to know that the borrower has achieved the highest possible level of security and validation.
Right. Green
The
light.
green light.
Yeah.
The only thing it's outstanding is your house.
Right.
Is it
Right.
worth it? Is there termites in
Right.
it? Does the electrical panel work right? Like all the stuff that we couldn't possibly have done because it's
Right.
not our house. We didn't even know the house existed yet.
Right.
And
Wow.
I'll tell you, if you are a homeowner or I'm sorry, if you are a prospective home buyer in 2026 and you are going out there to market with anything less than a
Yeah.
full, and I'm probably going to get like death threats from lenders out there that don't do this. Well, tough shit. I don't care.
Yeah.
Because if you're going out there with anything less than a fully approved letter in hand, it's like choosing to walk into putting yourself into a
Right.
disservice. It's like
Agree.
choosing to be like everybody else. And
Right.
to be strategic and to win, we have to strive to be unlike
Right.
everyone
Be
else.
different.
And this is a huge vehicle to do that.
Set the bar there so that your buyers can buy.
Absolutely.
Yeah.
I mean, our realtors, many times that like our preferred realtors that we work with, they have come to leverage this. They know this. So when they're out there talking to listing agents, and they're already setting that expectation. Hey, Cambria, just wanted to let you know our borrowers are not just pre-approved. They're certainly not pre-qualified. They are underwritten approved by the real, live, honest to goodness underwriter
Right.
that's going to give them their money at the end of the day. Call Dave Medina, and he's going to be able to show you exactly how we've done that.
And I know that's to be truth because I know who you work with and I see their numbers. So it sets them
Huge.
apart. It
Yeah,
does. It really does.
definitely.
Yeah.
And I think realtors, again, we're talking about maybe real estate professionals that don't even know
That it
that this is a
exists.
thing that
Yeah.
you can do this.
No, they think the pre approval No, sorry, the pre-qual, because the pre-approval is the first one that you said, right?
Pre-qualification is
Yes.
kind of like your light
And then
version.
pre-approval is what they think that's the almighty. You bring the pre-approval, but no, we're going one step above.
We are
Yeah,
going
I
to
love
the
it.
door,
I
right?
love
We're
it.
going to the
Ready to go.
proverbial door.
Ready to
Where
go.
I love that green light. That's like we should like make like a marketing play on that. Like
Right.
you're green lighted to buy a home because that's really what it is.
Right. I like it. I
Super
love it.
powerful.
I love it. Okay, so we've gotten two. What is our third
A
one?
third one.
A
Okay.
tactical plan for our buyers.
Tactical plan.
A
All right.
third thing bring to the table.
The market has softened. We've
Yes.
talked about that a little
Yes.
bit today.
It has.
Interest rates are starting to creep down a
Mhm.
little bit. We're utilizing seller concessions
Yep.
and a willingness for the seller to help the borrower combat some of these bigger problems like affordability,
Right.
inflation, like interest rates, all
Right.
these things. We talked about that heavily already today. But here's the reality. We're still challenged from an available inventory standpoint out
Mhm.
there. And a big part of the reason why I have a ton of past buyers that really want and some of them need to move,
Right.
but during that COVID-esque environment, they refinanced into interest rates at like 2.375, 2.5%. They literally are like they're handcuffed
Right.
to their home because they couldn't afford to sell it and then go out there and get like a marketable interest rate
To
today.
side note on that, is there opportunity for those homeowners that have the very low rate to be able to keep their home, rent it out, and then go purchase another one, even though they're not looking at, because they want to keep that rate, right? So, is there a good
There is.
opportunity for them with that? I don't
This is a
know.
great sidebar, so we will definitely time out on this, right? Because and this is probably this is not for our like first time home buyer
Right.
audience out there. This is more for that maybe next level or even seasoned investor, right? If you're sitting on a home at a 2.375% interest rate and you have a boatload of equity, there is a mechanism where we can tap into that equity without disturbing the first loan at all,
Okay.
right? We can pull a second loan on top of that to secure the money you need to go out and buy a new primary residence.
I love
And
that.
then you can put a long-term renter into that home or short-term rental, whatever your prerogative is, depending on your local market. And that gives you the best opportunity to cash flow the property. And because
Okay.
if your mortgage payment is only $2,800 because you locked in at
Right.
this ridiculous,
Right.
unprecedented era and you can rent that home for $3,500 like that example you gave earlier,
Yeah.
you're cash flowing $700 a month.
And that's my mindset, investor mindset. Don't ever
Absolutely.
sell real estate, put a renter in it and buy more, buy more. So good to know that you can, I didn't even know that you could do that. So
Absolutely.
I love
25,
that.
25 years ago when I was first getting into this career, a wise man once told me, a mentor of mine, God rest his soul, told me,
Mm,
Dave, you don't get rich by selling real estate, you
yeah,
get rich by never
I
selling real
agree with
estate,
that.
right?
Absolutely
For
agree with
sure.
that. Build your
That's part of what we
portfolio.
were talking
Yeah.
about. Like we need to switch the lens to
Yes.
the long-term impact of real estate. It
Right.
doesn't matter. The only day that the value of your house matters, Cambria, is the day that you have to sell it.
Right. Right.
Every other day is just an investment vehicle that you get to celebrate birthdays and Christmas and anniversaries and
Yep.
Halloweens and have amazing moments and deal with tragedy. It's your
Right.
home,
Right. It is.
right?
It is.
And then one day in the future, it will make a ton of sense
Yes,
to
it
sell it and
will.
cash in.
Yeah.
And don't get me wrong, there's always exceptions
Right.
to
To
the
the rule.
rule.
Always.
And
Yes.
there's people die,
Absolutely.
people get laid off. I mean, that's just a reality of the world out there. But all in all, that was not a misstatement when I said that
Right.
more millionaires are created in the United
They
States through
are.
the vehicle of real estate than in any other thing.
Right. I agree. I agree. So sorry to sidebar.
No, that was a good
So we
sidebar.
were
It was a
going
good sidebar.
into somebody owning their
Yeah.
home, very low interest rate. They're
Yeah.
nervous on what to do because
So
of,
so so they're not selling,
yeah,
right? So they feel stuck in their home, which means there's not a ton of inventory out there. There's more inventory than there was, I guess, probably like 6 months ago, but
right,
it's still very challenged.
right,
So if you're out there looking, especially in that 600,000, or maybe like first time home buyer, there's a lot of competition out
right,
there. So what we're seeing out there is that even on those particular homes, assuming they're shiny and beautiful and kind of
right,
like everybody wants that home, there is a tremendous amount of interest on that property, and then people end up bidding up the
right,
price of the home,
right,
right? Good for the home owner,
right,
bad for the home buyer.
right.
Well, what if I told you that there's a program that you can utilize instead of buying the $500,000 home that's beautiful, all tidied up, perfect paint, perfect flooring, perfect everything, right? Attracting everybody's interest. It's like a drop of blood in a shark tank. And instead, I told you, Cambria, what if we go find an unfinanceable fixer-upper, a home where the HVAC system is broken or was stolen, or the kitchen cabinets were ripped out, or the flooring is destroyed because they had a renter in there, and
Okay.
it's just they just demolished the place, and now the seller doesn't have any money to fix it up. So what do? They put it on the market, and they have to sell it for way less,
Okay.
right? Because the only people who generally can buy a home like that that has significant dilapidation or issues with it are people who are sitting on a boatload of cash, and
Yeah.
that's their advantage, right?
Right. Right.
Because hey, if somebody can't get a loan to buy the house because it doesn't meet health and safety
Right.
code or issues, forget about like cosmetic things. Like
Right.
if you like purple carpet is not going to affect the ability to get somebody to buy a home,
Right.
but a broken HVAC
Right.
system or an electrical panel where there's sparks flying out of it, or a house that's overridden with termites, or a
Right.
house with a roofing issue with it, the lender's not going to put any money on that deal.
And I feel like we're seeing buyers out there that are getting very picky.
For sure.
So it may not have the cabinets they want, the countertops they want, or the flooring, or it's 3 bedrooms and I really need 4 bedrooms. This, I think, would be perfect for that
It
scenario as well.
it
Like it
would
can
be.
go to one extreme to the
It
next, you
would be.
know?
It would be. And buyers are picky, as again, as they should
They
be,
should be,
right?
yes.
And again, if you're already pressing the envelope on your affordability, yeah, you want something that's exactly what you want,
Right.
not exactly what the previous owner wanted.
Or in 2020, we were just trying to get in a bigger house and we didn't care
Yeah,
what it was,
you didn't care
right?
what it was. People were making offers sight unseen.
They were.
But with this particular program, it allows you to make the house into what you want. So back to this example, okay? So let's say like you're in the hunt for a 500,000 esque price range
Okay.
of a home, and maybe that's a 4-bedroom home.
Right.
The one when the good houses go on the market, you're just getting your ass kicked,
Right.
right? The second it goes on there, they have 3 or 4 offers within a few days, and your realtor and you're really exasperated, and you're starting to kind of like, maybe this isn't worth it, right?
Right.
Maybe we should
Right.
just rent or sign another
Right.
lease. Well, what if you could go out there and instead find a home that that is being sold for 400,000 because it has all of these issues that you and I were talking about?
Right.
Well, we'll allow that borrower to buy the home at $400,000. We can give them the $100,000 in the form of their loan, included into their loan at the same low interest rate, right? We're not talking about credit card financing here. We're
Right.
talking about in
Okay.
their typical mortgage, right? Where they can use that $100,000 to fully rehab the property. They can change the flooring, they can rebuild the kitchen, they can update the bathroom, and in some cases, they can even add a bedroom. So if you can't find a 4-bedroom, go find a 3-bedroom that's priced right, and we can add the bedroom for you.
Wow.
It's amazing, Cambria. I'm telling you, it opens the door. I just recently closed a transaction with one of my top realtor partners, she's really in tune with this. She's not your average bear when it comes into
That's
real
because she's
estate.
a good
Elena
agent.
Flores, shout out to you. But she recognized like the buyer was just getting beat out by everything because they were working with a small budget.
Yeah.
Unfortunately, a first
Which
time home
buyers
buyer.
are right
Yeah,
now.
for sure. So
Affordability.
and we were getting beat out
Yeah.
with everything that was like shiny with bows around
Right.
it, right? They were getting their butts kicked
Right.
with people who were offering more money than they could offer for the home. So what they
Right.
did instead is she went out there and she found a home that like otherwise nobody would have looked at.
Right.
This is
And
like
they
you're
don't.
driving by that's like, oh, hopefully no one will see it. And she went and she made a strategic deal with the seller and actually offered them even less than that. And we said, we can have your money to you in 30 days and we'll buy it for X price below market, right? Well, the seller or the buyer, we were able to get them $85,000 of rehabilitation money. They put in a
Wow.
brand new septic. This house, they put in, not only did they fix the furnace, the house didn't have air conditioner in Southern California, Inland
Oh, oh
Empire. They were
no.
able to completely put in a centralized air conditioning system in it They redid the flooring. They fixed a bunch of termite issues that there was. I mean, you name it. They did all of this, and they are sitting in their house today, Cambria. Not only they're being successful as a first-time home buyer, but it's exactly what they wanted. The walls are the color that they wanted. The cabinets are the material they
Love
wanted.
it.
The countertops are exactly what they wanted. I mean, it was amazing,
So
right?
you and Elena are the hero, obviously, in this
Oh,
story because
huge.
they're in their home, right?
But you know what? The seller also got to sell their property, Cambria.
Absolutely, in 30
Everybody,
days.
everybody
So,
wins.
with that being said, obviously the issues that you mentioned, no HVAC system, typically you wouldn't be able to lend on, right? Because it's
Yeah,
unlendable.
it's
They would
unlendable.
they would typically require cash offer. With
Right.
this loan, what was it called?
The one I'm talking about specifically is the FHA 203K, which is
Okay.
FHA's version of a renovation loan. And
Okay.
the reason why I like this so much is for two reasons. A, back to our example, right? I bought a house at $400,000. That's how much I paid the seller.
Mhm.
And then I want to put $100,000 of rehab into the property.
Right.
So now you paid $400,000 for the property, $100,000 for the renovation. That's a total acquisition of $500,000,
Okay.
right? Well, you can get into that transaction with only 3.5% down payment
Wow.
based on the
Wow.
500,000 after rehab value.
Now, what happens if I go a little bit over
That
on
this is
my budget, right?
Yeah,
Because
well,
that
because
always
everybody goes
happens.
over
There's
on
that
their
now. I'm
budget.
really excited. I want to add this.
Yeah, this is also why I champion the FHA program so much. I mean, because there are other renovation type financing out
Right.
there, but there's nothing like an FHA loan, which gives you a below market interest rate, right? It's
Okay.
a government insured loan. The loan is
Okay.
insured by the Department of Housing and Urban Development. I mean, there is not a safer loan on the planet than the Federal Housing
Right.
Authority, the
Right.
FHA loan, right? It only requires you to put a 3.5% down payment,
That's great.
and it allows us a 10% variance. And I'll explain what that means. And that's super important right now because with the high cost of inflation,
Right.
it costs more to put flooring in your
Yeah.
home than it used to cost 6 years ago.
Yep.
So same example, okay? You're buying at 400,000, you're doing $100,000 of rehab, and then the post rehab value means the house is worth now 500,000, right?
Okay.
Ideally. But you really, really wanted to do this other thing to the home that was going to cost an extra $25,000, right? You wanted to, gosh, I don't know, put in countertops or whatever. I
Right.
mean, whatever,
Right.
whatever you wanted to do, but it exceeded that. In that example, with a $500,000 total acquisition, an FHA 203K gives you an additional $50,000 variance. So technically, you can over improve the house a little bit
By 10%.
by
Okay.
10% of the value of the home.
Okay.
So that gives you a lot of flexibility. I don't like I don't like promote to people,
No,
hey, you should
it's kind of
utilize
like a
every single
pad.
penny. It's a pad, right? Because if I'm
Yeah.
look, if I'm if I'm somebody where I have a long-term expectation that I'm going to be in this home, right? This is not a 2-year gig for me. This is
Right.
like a for real thing. I'm going to be here for a while. I'm going to
Right.
raise a family and, one day
Absolutely.
retire in this home or whatever it's going to be. What does it matter that you're borrowing $20,000 more than the home
Right.
is worth?
Right.
But you get the house exactly the
How
way you
you
want it.
want
What's
it.
the alternative? You buy the house and you go put $20,000 on a credit card at 28%
I know.
to
Right.
redo the
Right.
countertops or go through some ridiculous like contractor financing.
Right.
We're talking
Very
about
true.
being able to do this at below 6%
Right.
30-year fixed interest rate,
Right.
Cambria. I always tell people, look, if you're going to do it, do it. Don't sit here 6 months from now after using this program and say, oh, honey, if only we would have done this one little thing. Or can you imagine my borrower next summer had they chosen not to get the air
Uh,
conditioning put in?
yeah. Life's too
Oh
short.
my gosh, at 109-degree baking heat in
Yes.
their house,
Yes.
right? Now they're going to be sitting there, with a turtleneck on in the middle of
Right.
July. And they
Literally.
would not have been able to do this. And most buyers can't, especially first-time homebuyers. You do not need to be a first-time homebuyer to utilize this program.
Okay. First time home buyer mean you can only utilize first home buyer one time in your whole lifetime for an FHA loan, first time buyer loan?
No, well, okay. So first of all, big myth buster: an FHA loan is
Curious.
not a first-time homebuyer program.
Okay.
A lot of
Good
first-time home
Mythbuster.
a lot of first-time home buyers use it because it's very flexible from a credit standpoint.
Okay.
Debt to income ratios are really flexible. It's just a really flexible loan. So naturally, like first-time home buyers that maybe don't have like a super seasoned financial portfolio,
Okay.
they run towards the FHA program because it works with less than perfect credit. It works when mom and dad want to give you a gift to buy a home. Like it checks a lot of boxes
Right.
for first-time homebuyers. Now,
Okay.
there are first-time homebuyer specific programs that utilize the vehicle of an FHA loan, and
Okay.
then they'll offer some additional down payment assistance for first-time homebuyer, like quote unquote first-time homebuyers, and that's what you're referring to.
Right.
Yeah,
Good thing I sell title
good thing
and
you're
not
entitled. But
loans.
yeah, no, those are those programs. And the definition of a first-time homebuyer, believe it or not, is somebody that has not owned a primary residence within the last 36 months.
Okay,
So
that's probably where my mind was
yeah,
going, I think.
it's 3 years.
3
So
years, yeah,
technically, it'd be really difficult, but technically, you could be a first-time homebuyer 3 times in the same 10-year period.
and it has to be owner occ.
It has to be owner occupied.
Okay,
Yeah. For
okay,
any first time home buyer program out there, any of the like the grant programs or
right.
the state sponsored programs or any of those types of programs that bridge the gap to help first time home buyers make the transition between renting into home ownership, it's for primary residence only. If people are
Okay,
like have dreams of building
alright.
their real estate portfolio and
Right?
investment properties and all of that stuff, you got to start somewhere. And the way
Right,
you start is with the first time, being a first time
yeah,
home buyer and just putting a roof over your head.
right, right.
Yeah.
So many options here for
Yeah.
buyers, so how how would one learn more about this? Like if I was a potential buyer and I knew that I was in the market, talking with Rory, hi Rory, this morning, he told me he just bought a home and was talking to the neighbors. And the neighbors were talking about wanting to go buy an investment property, but the conversation that he had with them, the guy had no idea what he was talking about whatsoever. So Rory took that as an opportunity to talk to him and educate him. But a lot of people don't have that opportunity where their neighbor is an agent that is as good as him to educate him.
Right.
Where would one find out more information and get more educated about these loan programs out there or their opportunities that they have?
Yeah, there is a chronic issue out there with lack of education.
And I think it goes because everything's so readily available online, right? However, there's not the person to person
Right.
sitting down going over the buyer's specific scenario to see what is best for them and to know what their options are out there, right? Because one for what is going to work for one person is not always going to work for the other. And there's a million different programs out there for buyers,
Yeah, you bet.
correct?
And ChatGPT can't always differentiate
No,
like who's
no,
who in that
absolutely
mix.
not.
So look, chronic problem of education. So the answer is get educated,
Right.
right? I mean, look, and if the current team that you're working with is not providing that, they haven't talked about just some of the simple things we've talked about today from a
Options.
strategic standpoint,
Yeah.
find a new team.
Right. Agree.
you
Agree.
know like
Yeah.
more the fact of the matter is though, Cambria, is like a lot of people will spend more time deciding where they're going to go to dinner Saturday night no, seriously, than in preparing for the largest financial decision that they're
It's
ever going to
so
make.
true.
It's
So
crazy.
true.
It's
It's
crazy.
sad. Yeah.
Buying a home is very emotional,
Right.
right? A lot of times the house is the catalyst
Right.
that makes them decide they want to buy a home. They're out there on the weekend. Oh, hey, look at that open house sign. They stop by, they go in there, and it's like their eyes roll back into their head. I got to have it. I got to have it.
Right.
Right. So I like to I like to advocate for the opposite. People ask me, hey, Dave, when is the right time to start getting prepared to buy a home? Is it 30 days before, 3 months before, a year before, two
Mhm.
years before? And I say the answer is yes,
Agree because we're seeing people that have necessarily some money to put down. Everything is going up, so they're putting more on credit.
definitely.
So I've been hearing that from agents is that they have necessarily some money to put down, not a lot, but once they pull the credit, their credit's shot. So when
Runway.
is the right time?
Runway. The
Right.
long look, if I'm in a plane taking off, I want that pilot to have the longest
Right.
runway. If
Runway.
they want to just cruise an extra, mile
Agree.
and a half if they want before
Right.
lifting off, all the better.
Right.
And that's what I like to promote. Like if you honestly feel like home ownership is in the cards for you
Right.
sometime in
Mhm.
the next 1, 2, 3, 4, 5 years,
Right.
the time to start getting prepared for that is now, because too many people in our industry have made real estate, especially on the lending side, about getting approved for a loan. I don't believe that's the case, right?
Right.
It's not about getting somebody approved for a loan. It's about getting them approved for the best loan. And when they
Right.
find the house first, that is the epitome of putting the cart before the horse,
Mhm.
which means we don't have time. We
No.
don't have time to optimize anything. I can't help somebody improve their credit score.
Right.
I can't help them derive better sources to ascertain the amount of money
Right.
that they need. We can't properly strategize on how to present the offer. Like there's so many detrimental things that happen
Right.
when you're not putting in the time. So, I mean, again, it's about the right time. I'm super excited. We've launched a program. We call it the Take Control program. And if you go to our Google page, I mean, you'll see it all over the place. And it's not, interestingly enough, we have never gotten anything less than a 5-star review, which, and I don't say that like pretentiously, but it's really interesting, right? If you actually went in and dug into the reviews, Cambria,
Right.
you'll see that about 20 to 25% of the reviews, 5-star reviews that we've gotten from people are for people that we've denied for a loan. How about
Really?
that, right?
And denied because of their credit?
For
Or
various reasons. But what we did is we invested the time with them,
okay, which is
right?
huge.
It's huge. That's most people, they give their social security number over the phone. Oh my God,
I
why somebody
know.
would do
I
that? But they
know.
do that.
Yeah.
And if there's a super crappy credit score, then all of a sudden just people just don't call back.
Right.
They're not returning emails, they're not returning texts. And then the buyer's just kind of left there like, what the heck? Like, do I qualify? Do I not qualify? They don't know any
Right.
better. So we take through people through like a very dialed in process that we call the take control process, and it accumulates at the end of that at what we call the empower hour. And this is some time that they get directly with me or somebody from my team, where we go through the A to Z of buying a home. And what if you don't buy a home? No big deal.
I
There's
love
no
it.
cost, there's no obligation. We don't need a credit card, a checkbook. Like this is all just for
You're empowering them,
that's I
educating
mean
them.
that's what it
Yeah.
is. It's all about it because it works so much better. Certainly we want to be there for them when they're ready
Right.
to take those steps. But I
Right.
can't tell you, I have helped thousands of people in my 2.5 decade of doing this
Right.
achieve the goal of home ownership. Cameron, that's a lot of
It's
bodies, a
huge.
lot of
It's huge.
families, a lot of humans. But I'll tell you, if I were to close my eyes right now and think about the most memorable ones, I'm talking like the tear jerkers, the
Right.
ones where it was just uncontrollable sobbing when we're signing loan documents.
Oh,
Waters like tears are falling on the documents
so
as they're signing,
cool.
like amazing, right? Have been the ones where it wasn't easy,
Right.
the ones where it took a year and a half to get
Right.
ready. But I'll tell you, when somebody sits in front of me and they make their commitment to doing what has to be done to achieve the goal of home ownership, there is no line that I draw.
Right.
Me and my team, we will do whatever it takes, whenever it takes, and forever, how long it
Right.
takes in order to get them, if it's meaningful to them. But at the end of the day, we can only provide a roadmap. At
Right.
the end of the day, the borrower or prospective borrower has to be motivated to get it done.
Absolutely.
Yeah. So I encourage anybody who wants to learn more should participate. We run live webinars. They can
Love
go
it.
to our website at takecontrolre.com or elevategroup.com. We'll put all the information below. And we run these a couple times a month. They're live webinars directly with me. And we
Love
talk
it.
about a lot of what we're talking about today, plus a lot more to
I
this.
love
Yeah, it's a
it.
great first step. And even, for that borrower who is just toying with the
Right.
idea
Right.
of like, oh my gosh, honey, could this
Is
really
it an
be for
option?
us? Right?
Yeah.
This is the absolute first place to put your foot down.
I love it.
Yeah.
I love it. So, quick question. When one does have credit issues, how long? Because there may be somebody watching this that says, oh, I know I have some credit issues.
Yeah.
What's a standard? I know there's no standard. That's a trick
That's an
question.
effed up
Yes.
question right now.
How long does it take to fix it? I know some could be a month or 30 days to
Yeah.
just contest with a letter, but ultimately, if they do have credit issues, I mean, what's the longest and shortest you've seen?
Here's what I'll say.
Okay.
Here's what I'll say to that. Because different strokes for different folks,
Right.
obviously, right?
Right.
I mean, and it's not even just about the credit score,
Right.
right? Because I could show you a 560 credit score that I could have ready to buy a home in 60 days, and I can show you a 560 credit score that might take multiple years to
Right.
be able to get back to the position, like
Right.
I don't know, above a 600 credit score where they might
Right.
be able to buy a home. Here's what I will say though. It is not a mystery. There is very smart technology. Here is one of the areas that we have really embraced from a technology standpoint. We have AI driven simulators where we run, and by the way, we don't pull hard inquiries for customers anymore that are just getting started on the process. We
Okay.
can pull a soft inquiry.
So it
That way,
doesn't hurt their credit.
yeah,
Okay.
it doesn't hurt their credit, and we don't have to keep doing this every freaking 60 days
Right.
in order to stay with a fresh report. So we can run a soft credit pool. It gives us all of the information we need. It gives us all the trade line breakdowns, the credit scores, but it also opens up the door to us being able to run this through what we call the what if simulator,
Okay.
where we can say, okay, look, here's Cambria today. Here's where we need Cambria to be.
Mhm.
What is the pathway of the least amount of time and least amount of money to help us get from point A to point B? And it literally gives us a step-by-step report. So gone are the days where we're like,
Mhm.
Cambria, I really think you should pay off that credit card or do
Right.
this. It's all like this anecdotal feeling type
Right.
stuff.
Right.
Credit scores are not feeling. It's not done by a human being. There's not somebody grading
Right.
what credit score they should give you every single month.
Right.
It's based on a computer. So AI has just hacked the system. And we now know the algorithm that goes into generating these credit scores. So we can hack the algorithm, and we
Wow.
can, if we know we want to do something in 6 months. So I will tell you, if somebody is, look, not everybody, sorry, don't shoot the messenger. Not everybody's going to be a homeowner.
Right.
Sorry,
Right.
right?
Right.
It is what it is. But for people that honestly, they've got the job, they've got a little bit of savings, and they've got the mindset,
And they want it and
and
they're
they
willing to
want it.
work for it.
They want it, and that's what I mean. The
Yeah.
mind, that it is the precursor. It's the starting point to much, much bigger things in life, right?
Right.
I'm on. My wife and I live in the home of our dreams,
Right.
gorgeous 5-acre estate, but like it took us 7 homes
Right.
to
Right.
get there.
Right.
7,
Right.
Cambria, right? And each one of them was a further stepping stone to be able to achieve the
Absolutely.
home where we know our grandkids are going to visit us one day,
So cool.
right? So for that person, for the person that really wants it and they've got the tools to get it done, they just have some bumps and bruises
Mhm.
because maybe they were their early 20s, they did what I did in my early 20s
Right.
or something.
Right.
There's almost no situation that within a year we can't get that person ready to buy a home.
Awesome. So it is attainable.
Oh, it's
The
totally
want is
attainable, and
there.
we do this time and time and
Right.
time again, and I'm telling you, those are the ones we remember
Right.
because it's beautiful. Those are the tear jerkers,
Right.
right? And it's not because of the work that we do on our part. This is just systems and technology and time.
But
Time
it is the
that
work that you do on your part
it's time.
because it's time and you've been through it. You've been doing it long enough to where you know what works and you've put these systems into place for a reason because they work.
Well, the whole industry, at least from the lending side, is telling us to spend less time with the customer.
Yeah.
Do it
No,
automated, have
no
them fill
way.
this out, do
No.
this. It's all about
Yeah.
getting our hands off of the customer.
And empowering them.
We're just
Yeah.
stepping the opposite direction, and we're just trying to say, like, how can we spend more time
Right.
with the customer
Absolutely.
and help
Absolutely.
them. So, and when you've been doing business as long as my team has been doing it, 2.5 decades, we're going to be here today, we're going to be here next year, we're going to be
Yep.
here 5 years from now. So we take the equal investment
Right.
on somebody that is a client potentially 2 to 3 years from now as we
Right.
would for somebody who's a client 2 to 3 days from now.
Right. I love
So
it. I love it.
you're the best, dude. Thank
Yay.
you for being here
Thank
with
you
me
for
today.
having
I'm
me.
gonna have you on in the future too because
Awesome.
I know that people want to know what the hell title insurance
Right. I
is.
do sell title, by the way, too.
You are the right person to talk about it. So we're gonna have you back on and talk about
Awesome.
that as well.
Thank
But
you.
definitely check out takecontrolre.com. I'd love to see you at the next live event and say hi when you get there.
Bye, guys. Great job.